Hello and welcome to this video in which I will take you through the role of portfolio managers, which is chapter 7 of series 21B NISM exam. In this video, I will help you understand the key concepts which are discussed in this chapter. Because of time limitation, I will not be making the video for more than 25 minutes. If some concepts are not covered in this particular video, I will discuss them in the second video. So let us start by looking at overview of portfolio managers in India. So the first thing that we need to know is that portfolio management basically involves selecting and managing a basket of assets, which could be fixed income, which could be equity, which could be mutual funds, okay, that minimizes risks while maximizing return on investment. That is what is the key purpose of managing portfolio. Now, to do this activity, we will need a portfolio manager who has to play a pivotal role in designing customized investment solution for clients. So this is not a generic solution which is being offered. This is a customized solution. A mutual fund is a generic solution because mutual fund, the same scheme is applicable for everyone. So if you buy, say, an index fund, everyone will buy the same index fund, right? And will have the same set of portfolios within that index fund. But in case of portfolio management, it is different. So what is portfolio management and who is a portfolio manager? So first of all, a portfolio manager is a body corporate. That is something that we need to know, right? It's a body corporate which has a contract or a arrangement with a client. That is clear. Next point that we need to know is that it advises or directs or undertakes on behalf of client, okay, the management or administration of a portfolio of securities or clients' funds. So that is what is being done by a portfolio manager. So portfolio manager, first thing, it's a body corporate, right? The second thing that we need to know is that a portfolio manager has an contract or arrangement with the client, and he can do multiple activities, uh, which could be advising, directing, or undertaking on behalf of his client the management or administration of a portfolio of securities or clients funds. That is what is being done by the portfolio manager, and these portfolio managers are registered and regulated under SEBI portfolio manager regulation, which is very clear. Now, there are some words here, whether discretionary or otherwise, which we'll discuss as we go ahead. So, 1993 historically marked the beginning of portfolio management service when SEBI drafted the portfolio managers regulations. Okay, and these were the first few regulations. Okay, and over a period of time, these regulations have evolved. So in India, the major providers of portfolio management services are big brokerage firm, asset management companies, and independent experts. So what are the types of portfolio management services that we can look at? Okay. So on the basis of provider, we have asset management company, brokerage firms. Okay, these are the entities, right? And these are the important players that we have, correct? We also have boutique independent PMS houses, and when it comes to handling the products, okay, or probably mm, you know uh, talking in terms of uh, the classification on the basis of products, we have equity based PMS, fixed income PMS, commodity PMS, and mutual fund and multi asset. Okay, so there is a provision to have portfolio managers classify their clients on the basis of something very simple, which is what we can say as the net worth. Okay, now we will look at what are the types of portfolio manager. Okay, so the first type of portfolio manager is a discretionary portfolio manager who, under a contract related to portfolio management, exercises or may exercise any degree of discretion on the investment of funds or management of portfolio of security of the client, as the case may be. Now this is a very important point to note. Okay, so here, in case of discretionary portfolio management, The entire control of the portfolio management is with the fund manager, and the fund manager decides how to manage the fund. The client has absolutely no control. Okay, so the discretionary portfolio manager individually and independently manages the fund of each client, okay, as per a contract. And the point to be noted here is that this contract can be either based on an existing service of a portfolio manager, or it could be customized also, right? So the second service is what we call as the non-discretionary service. Now here, the portfolio manager has not got any discretion. So the portfolio manager does not exercise his discretion in case of buying and selling. This is something that we need to know, right? uh, when to buy, what to buy, all this is with the investor. So who has this discretion? This discretion lies with the investor will look at this. The execution of trade is done by the portfolio manager. Okay, so please remember this: whatever trade that has to be executed, that will be taken care of by the portfolio manager. And portfolio manager is not looking at investment execution service. Sorry, portfolio manager is looking at investment execution service, not investment management service. This is an important point that we need to know. All of us need to know that the investment, okay, execution service is with the portfolio manager. Okay, so please do not forget this important point, and this is something which you must remember, which is a unique role of what we call as a non-discretionary portfolio manager. Now, this is the point that I thought I will highlight. Okay, there can be another option of advisory. Okay, so here neither the execution is done nor the management is done. Okay, this advisory service, portfolio manager suggests the investment idea or provides non binding investment advice. Remember, the investment advice is not binding, huh? It is non binding. Okay. And the execution of transaction is also with whom? It is with the investor only. Okay. Uh, Kindly note that this is not being done by what we call as the portfolio manager, correct? So the investor also executes the transactions, okay? And who will avail this kind of transaction? Obviously, it is well known that it will be availed by institutions. What is the organizational structure of PMS? So a PMS has to be a body corporate, okay, that is clear. And the body corporate is defined in the section 2, subsection 11 of the Companies Act, okay. And it says that body corporate will only be portfolio manager. So there are two methods to identify body corporate. First, the exclusion method. Okay, this what you are seeing is the exclusion. Exclusion here means that uh, body corporate or corporation includes a company incorporated outside India, but this does not include a cooperative society registered and any other body corporate, okay, which the central government may by notification specify in this regard, right? That is what is the exclusion. But in terms of inclusion, okay, we have the method which is the body corporate includes these players, right? So please just note it down, because what will happen is that if you note this down, you will realize that body corporate is private company, public company, one person or company, small company, limited liability company, like that. Okay, and uh, we know that what is a body corporate. So corporate has a completely different legal status apart from its members. Okay, now there is a requirement to register the portfolio manager. Portfolio manager must be registered, and the application has to be made as part of form A of the schedule, right? So form A will have first thing particulars of the applicants. Who are the applicants? What is their profile? So address and all those details will be captured here. Then the organizational structure is also captured, and what is needed is memorandum and articles of association, partnership deed. All these documents will be required very clearly. What additional thing is required is the date and place of incorporation, status, organizational chart, key management personnel, particulars of promoters. One thing that we need to know, which is what we'll discuss going forward, there are two very important entities, and they have particular requirement in terms of who can be this. Okay, and what is the area of their work, which we will discuss as we go ahead. Okay, and employee details are also required, correct? So details of registration with SEBI or any other government regulatory body are also required, and list of major shareholders, partners of applicants holding 5 or more percent of voting rights needs to be also shared. This is an important point. Then you have the infrastructure requirement, which is very easy to understand. Business plans for 3 years, okay, and that is what you must note again. This will help you to prepare for exam. So this is a business plan. Financial information will be typically with respect to capital structure, which will be required for uh, preceding year of the current year, preceding year, and current year. So basically 3 years. Net worth not older than 3 months. Okay. So net worth certificate should be not older than 3 months is what will be needed. Where is the resources being deployed? What is the net profit? Principal, bank details. Other information will be what are the disputes that you have, any indictment that has happened, any other information considered relevant to the nature of services rendered by the company will be required. And this period is important from exams perspective. Then business information will be required, including type of activity, facility for making decision, risk profiling, procedure. What is the procedure that portfolio? So you may get a question as to which of the following information is not required. Okay, so you must know this. uh, a list of approved broker through whom order shall be placed. That is also needed. Accounting system, research, and all that. Experience is required. Additional information will be required, which will have details of custodian, uh, when what is the registration number and all that. We will talk about custodian, and then finally there has to be a set of declaration, which has to be given with respect to declaration of compliance, fit and proper person, clause 12b declaration, fees and charges, types and frequency of reports submitted, time taken for transfer of security into client's account, declaration with clause E sub-regulation 1, all these are needed. Okay, so before issuing a certificate, what will SEBI do? Okay, so SEBI will check certain things, whether the applicant is a body corporate, is there necessary infrastructure, manpower in place, and there has to be a compliance officer, and there has to be a principal officer. Please remember, you must know what is the degree requirement of principal officer, because there are questions which will ask, can a history postgraduate be a principal officer? Just as a data point. Second thing, the experience which is required. This is very, very important again. Okay, and the third thing, that you should have an ISM certification from time to time. There has to be one employee apart from principal officer and the compliance officer who must have a graduation with 2 years of experience. Okay, that is what is required as a qualification. Please do not forget to note this. This is very important again from exam perspective. Any employee of portfolio manager who has decision making authority related to fund management shall have same minimum qualification requirement. If there is a disciplinary action that has been taken, that has to be checked. Application fulfills the net worth requirement. Net worth requirement is 5 crore. You must have a net worth of 5 crores. The applicants and its directors, principal officer, compliance officer, or employee involved in any litigation connected with securities market that has an adverse bearing will be checked. Applicant and directors, principal officers, compliance officer, or employee at any point of time convicted of any offense involving moral turpitude or has been found guilty of economic offense has to be checked. So the point that I'm trying to highlight here and tell you is that you must be very clear about role of three key entities. That is what I'm writing here. First is the compliance officer. So there is a compliance officer. Then there is a principal officer. Okay, who is the compliance officer? Who is the principal officer? Okay, principal officer. And then there is a employee. Okay, so please note down what is their role and why they are needed. Correct. Now, what is the general responsibility of a portfolio manager? That is very important. So, it is expected that there has to be an individual management of the funds and securities. Okay, so uh, which should not partake the character of a mutual fund. In case of mutual fund, everything is for everybody. Here there is a specification, right? Non-discretionary shall manage the funds in accordance with the directions of the client. Okay, so this is where it's very clear again. Okay. Minimum 50 lakh rupees is needed if you want to, board a client for portfolio management services. Uh, Here there are two exceptions. Okay, one, accredited investors. If there is an accredited investor, that is not required. And there is another exception which we'll see going forward. So minimum investment amount per client shall be applicable for new clients, provided further that subject to appropriate disclosures in the document and terms agreed between the client and the portfolio manager, the requirement of minimum investment shall not apply to accredited investor. That is a point. Okay. And that requirement of minimum investment amount shall not apply to co-investment portfolio manager. That is what I was trying to highlight at that time. So these are the two things that you have to be very clear. The portfolio manager shall act in a fiduciary capacity. There is a responsibility to segregate client's account, and the bank account has to be maintained with a commercial bank and not with a cooperative bank. So questions may be there, can it be maintained with a cooperative bank? No, only with a scheduled commercial bank. That is very clear. Okay, there is a RBI's act which under which the management of funds has to be done, and portfolio manager is not supposed to borrow funds or security on behalf of client. This is a point which is again important from exam perspective, and shall not lend securities. That also is there, but if there is any exception provided, that has to be considered. Portfolio manager shall ensure proper and timely handling of complaint. The portfolio manager shall ensure that any person involved in distribution service of its services is in compliance with these regulations. Now, question that arises is how the administration of portfolio is to be done. So we have to remember that pool execution can be done, okay, but the allocation has to be done in individual account, which means you can buy something in together. You can buy 1,000 shares together, but allocate it to 10 different clients. That is what is the first thing. Portfolio manager has to enter into an agreement in writing in assignment of management of funds and security with the client. The agreement clearly defines the relationship and sets out their mutual rights liabilities. Okay. Now, agreement between portfolio manager and client also, has an investment approach. This is very important from exam perspective again. So what is investment approach? I will just share it with you. Investment approach is a broad outlay of type of securities and permissible instrument to be invested, and that is what it says. And the agreement also includes the areas of investments and restrictions. Okay. Uh, Circumstances leading to premature withdrawal. So there can be a premature withdrawal that can be done by the client. Okay. It has to be as per the agreement. Okay. And this agreement will very clearly specify, okay, what is the withdrawal fee. So the withdrawal fee has been defined year wise. Up to 3 year there is a withdrawal fee that has to be paid, but after that there is no requirement to pay the withdrawal fee. Okay. What are the do's and don'ts of portfolio manager? Same as what we saw earlier, that the redressal of grievances must be done, which is as per the SEBI timeline. Okay, which has to be fulfilled. Okay, now this is one aspect. Portfolio manager has to abide by code of conduct, keep funds and securities separately, transact as per RBI guidelines. Portfolio manager shall segregate the funds of each client. He will not derive any benefit. Okay, will not lend securities. It will not invest money except in agreement between the client and portfolio manager. And when it is investing in mutual funds, shall not charge any kind of distribution fee to the client. That is very clear. Huh? There is no permission to leverage. Okay, bill discounting, badla, and all cannot be done by portfolio manager. The portfolio manager shall not invest the funds in the portfolio, other portfolio management company. Huh? So, a portfolio managed or administered by another portfolio manager. Uh, Advice will not be taken by a third entity. Okay. There no speculative transaction should be done except in case of derivatives. Portfolio, that means delivery of security has to be taken. Portfolio manager shall purchase or sell securities separately for each clients, and he can, however, pass on the benefit of aggregation, which means he can buy in bulk and use a weighted average price for the allocation. That is important. Portfolio manager shall not hold securities belonging to the portfolio account in his own name, and portfolio manager can only do off market transactions in these scenarios. Now let me tell you what is the meaning of off market. Off market means when you are not trading in the stock market. Okay, so if there is a settlement of clients own trades, you can do an off market trade. Collateral, you can do off market trade. Uh, if there is dealing in unlisted securities, because unlisted securities are not traded on the stock market, so it can be done. Now custodian has to be appointed by every portfolio manager except who is providing advisory services. So if you are providing advisory services, no need to appoint custodian. Records will be maintained, which is balance sheet, profit and loss account, auditor's report, statement of financial position, and records in support of every investment transaction and recommendation, which indicates data, facts, or opinion related to investment decision. This has to be very clearly followed. Portfolio manager should intimate to SEBI the place of work of books of accounts, records, and documents. Portfolio manager should, after the end of each accounting period, furnish what balance sheet, P&L, and other such documents to SEBI. It should also furnish what is called as the details which have been mentioned. So, net worth certificate, portfolio manager is required to preserve books of accounts for preceding 5 years. That is important again, right? Accounts and audits will be done. So, portfolio manager shall maintain separate client-wise account. The fund received from client investments, disinvestments, all credit to the account, like interest, dividend, bonus, everything has to be uh, you know maintained separately. Correct. The tax deducted as such as required under income tax will be recorded. Books of accounts will be audited yearly by qualified auditor. Portfolio portfolio accounts of portfolio manager shall be audited again annually. Client may appoint a chartered accountant. This is the client's right basically, and the audit can be done. Okay. Portfolio manager has to cooperate. Portfolio manager is required to consider all clients portfolio managed for audit of the firm level performance. The terms of reference shall be as per the APME. APME is a body which is just like AMFI, right? AMFI is for mutual fund, and portfolio manager shall submit the confirmation of ever compliance to SEBI within stipulated time. Every portfolio manager has to appoint a compliance officer, but the most important point is that compliance officer will independently report to SEBI. Okay, so these were the questions from this chapter. There are certain sample questions which I'm sure you will know by now. I'm not discussing them, I'm just showing it to them. You can download this book also very easily. So I hope this made some sense for you. Please do paste your comment in the chat box.